Folks, welcome to the Contrarian Trader. This is Robert Desmond. It is Sunday, March the 14th, 2010. Folks, last week, I'll be perfectly honest, it was a rough week for us with our short positions. And let's get straight to the S&P 500. And you can see that it rallied once again last week, up a little over 11 points. And almost 1% for the week. Volume picked up, and it was above average, so the bull rally appears in effect. Where it did hit some resistance was the 1150 level. We have yet to see that breakout there. We might see that this week. Now, I stopped out of a couple of short positions last week, and we did reopen one of them on Friday, and we opened up a brand new separate short position as well. So if you'd like to see what those are, sign up for the free 14-day free trial offer, and you get the free access to our portfolio. And I'll be to my members who are watching now. Check in for the weekend commentary. I'm probably going to. I haven't decided whether I'm going to email that out tonight or do a video. But stay tuned. Check your email either way. I'll send out a notification whether or not I've uploaded a video, or you'll see an email commentary come out your way. So that's for members. If you would like to get that members only update, sign up for the 14-day free trial. Okay, let's get back to the S&P 500. Like I said, the 1150 level, that's key. If we see a breakout above the 1150 level, more than likely we're going to head to this 1200 level. That's going to be our next resistance level. So we're going to keep our stops tight on our short positions and get out of the way. We don't want to stay in front of this locomotive if it does break out. Now, there are a couple of things that I'm going to bring up that should be of concern. The VIX, it's well below 18. Now, we saw a bearish reversal on Friday. That can continue, so we might see an update on Monday. Let's check out the IWM. We saw this has been a stellar performer. The IWM, however, did see somewhat of a reversal. It did close well off of its lows on Friday, but is at extreme overbought levels, and the down volume was fairly high. There are still more buyers than sellers, so it's yet to be seen whether or not we've seen a top here in IWM. But let's keep an eye on it. You have an RSI above 76, and I'm watching this ADX line here. This is a really, really good indicator for me. I always like to see whether or not this is going to come for a double top. And if you do see that, you saw it back here, twice back here, and it's a really good indicator. You see that double top get put in, look out below. Money flow, you're not going to get much stronger than this. So you still have a lot of money coming into the IWM. Let's call it a neutral day on Friday, but let's be really careful. This is extremely overbought segment of the stock market. Let's take a look at the VIX for the Russell 2000. It's not quite as pessimistic it's not as optimistic as the VIX is, but this is the volatility index for the Russell 2000. It breaks it out. This is the RVX. If you have stock charts, use a dollar symbol RVX, and you'll be able to get access to this. You need to have a subscription, I believe, though. And let's keep an eye on this. We're probably going to see a pullback to retest this 2031 level. And if it breaks down below the 2031 level, it can go substantially lower. You know, there's a lot of complacency in this market right now. And the VIX. Let's take a look at the monthly chart. You know, you say it. You know, wow, it's really low here. I ought to really start getting short. You know, you got to keep in context where this index has gone before. Look at all the way back here. Went all the way down. This is late 2006. It was down at 9.39. So it could drop by another 50%. So just please, just be careful, okay? Don't jump in with both feet on the short side here. Like I said, we got stopped out at extreme oversold levels, overbought levels on this market. So I'm not gonna try to fight this market anymore. I've done it for too long, and this past week came back to haunt us. The U.S. dollar, very bearish day on Friday. We're going to look for this line here to be our stop point. Remember, we went long the UUP, which is the U.S. dollar ETF, back here when nobody wanted it. We're right now shorting or shorting the market using ETFs that short the market, and they look similar to this. Nobody wants them, and everybody wants to own the long positions, and I understand that. But now we rode this rally higher. Now what we're going to look for is whether or not it can hold the support level. It held it back here a couple of times, held it here. Let's see if it can hold. If it breaks the support level, we're going to take profits on the UUP. And I'll send out an alert to my subscribers. A couple of things I want to bring up that we should all be watching out for. This is the SMH. These are the semiconductor holders. There are two sectors that really rule the market, and the market really needs them to continue higher. And the first is the semiconductors. And this line here is the price performance of the semiconductors holders against the IWM, the Russell 2000. Here's how I have the setting here. You'll see it. Price performance, IWM. You can see that the IWM has really outperformed the semis, where the semis are doing much better back here. Since that January sell-off, which we call that sell-off, since that sell-off, they have yet to regain their luster, and they are risking a rollover here and a breakdown. If they do break down, you're going to see IWM, you're going to see sellers really come flooding in here. So watch the semiconductors holders. If the semis begin to sell off, the Russell 2000 is going to have a lot of problems attempting to continue higher here. Let's take a look at the XLF. This is what they've needed. They needed this breakout. We predicted this. You can watch a couple of videos ago that I predicted they were going to try to rally the financials, which they have. They broke them out. They tried to break it out above the 1570 level, reversed on Friday. Let's keep an eye on it. Will this market be able to break out, the S&P 500, will it be able to break out above the 1150 level without the participation of the financials? It's yet to be seen. Will the IWM and the NASDAQ be able to continue higher without, here's the NASDAQ, similar pattern as with the Russell 2000, will it be able to continue higher without the participation of the ever so critical semiconductors? Let's keep an eye on these key sectors. If they break down, we have a big problems on our hands if you're long. And the setup on the semiconductors holders is a possible head and shoulders formation. So here's our neckline here. We have our left shoulder, head, right shoulder. Keep an eye on this. We saw a failed head and shoulders breakdown back in the summer. Let's see if that happens here. You can't bet all your money on these. This is only an indicator of dictating where it might go. You don't want to bet all your money all at one shot based upon this one possible setup for a breakdown in the semiconductors. So just watch and wait. If you're intent on getting short, I have no problem with that. Build your position. Join the Contrarian Trader, and we'll show you how to build your positions. Email me, and I'll be more than happy to respond to you on how you build a position in the stock, in an individual stock. The U.S. dollar. Here's something that was curious on Friday. Usually, the market responds to a declining dollar with a positive market. We saw positive action on the Dow Jones Industrial Average, but to be honest with you folks, this is pretty weak action here. We have yet to take out the January highs. So let's keep an eye on this market as we go forward. We have a big Fed meeting this week. That could be a catalyst. Also, the Greece issue has yet to be resolved. So don't listen to all these talking heads on CNBC and these European officials that call on TV saying, don't worry about it, it's not to be worried about. They haven't ironed out a deal and it's been weeks. And these are very limp-wristed Europeans over there. You know, they don't like to stand up for each other. Well, not all that much, and they could care less about Greece, to be honest with you, except for the extent of how it affects their individual economies. So let's see if they step up to the plate and bail out Greece. Because if they do not, what you're going to see is this dollar rally higher, and you're going to see the the FXE, which is the ETF on the euro, you're going to see it collapse. So that's going to be hard on the market. It's going to hurt exporters big time. So please, if you're interested in becoming a subscriber, join up the 14-day free trial. If you have any questions, please shoot me an email. And everybody have a great trading week. Subscribers, please check in to your email boxes later on this evening for either a new video for members or an email commentary. Thanks, folks.